If you're confused about where crypto stands right now, you're not alone. Even seasoned analysts are struggling to read the mixed market signals. Some metrics strongly suggest a bottom has formed, however, others hint that a deeper correction is still on the table. And today I'm going to simplify the noise. I'll focus only on the most historical, reliable indicators. So I'll break down the hidden signals suggesting crypto may be forming a bottom, also point out the red flags that point to potential weakness, and by the end, you'll know if this is a real recovery or a pause before more pain. Hey, what's up everyone? My name is Cody, and if you're new here, make sure to like, subscribe, and turn on notifications so you know when I drop latest content. Follow us on Twitter, Altcoin Buzz, and as always, it's not financial advice, and wish the best of luck in your crypto ventures. Also, make sure to join us for our X Spaces, Tuesday to Friday at 9 a.m. EST, link down below. The crypto market is showing clear weakness right now. Prices are not stable, volatility has increased across major assets, and Bitcoin even faces a possible drop towards the $84,000 level if the support breaks. And this comes at a very strange time where almost all recent news has been bullish. The Fed mentioned that quantitative tightening ended in early December. We also saw the end of the US government shutdown. And both of these things support risk assets, but crypto hasn't priced this in yet. This creates a bullish setup even if prices are currently weak. At the same time, stablecoin supply on exchanges and off-chain wallets remains high. This means that buyers could step in fast once confidence improves, yet prices continue to fall. But also be aware that ending quantitative tightening doesn't automatically mean a big liquidity surge. Stopping tightening is not the same as injecting full extra liquidity or QE. However, if these two factors become more broadly accepted by investors, there may still be hidden upside. The market hasn't fully yet reflected those tailwinds. Hence, the market may not have priced this in yet. So what's really going on? Well, the answer lies in market structure. Liquidity is thin, large holders are moving carefully, and many traders are over-leveraged, which creates sharp moves when funding flips. Many Bitcoin OGs have been selling, and at the same time, macro pressure remains. Rates are still high, and risk assets feel that strain. This creates a split between sentiment and price. Investors expect good news to push the market higher, but the data shows stress under the surface. When bullish headlines meet weak liquidity, prices can drop fast. This is the phase where the market flushes excess risk before any real trend can form. So let's take a closer look at some of these indicators. Although the market has changed, Sui still keeps pushing and breaking records. The Misten Labs team, the team behind Sui, keeps launching new products, and its ecosystem also keeps growing. And with that, many stats keep showing new all-time highs for Sui. Sui is still killing it in all the big sectors it supports, like DeFi, where DEX volumes keep making new records with $175 billion. DEXs, perps, and inflows are all surging into year-end. Institutions also gain regulatory custody and liquidity support for Sui, with Crypto.com recently launching secure institutional custody solutions for Sui tokens. Various native stablecoins are also available on Sui. For example, Circle's USDC, Sui USDE in partnership with Athena, YLDS from Figure, and USDI backed by BlackRock's tokenized money market fund BIDL. So if you haven't used Sui lately, then come give it a try and follow Sui's X account for all the latest updates. So it looks like for the short term the dip is over. However, for the long term, it depends on what Trump will be doing. Nothing in Trump's policy is short-term bearish. Right now, his actions are firmly bullish for Bitcoin's multi-year trajectory. He keeps saying that it'll make the US the crypto capital of the world, and his administration has been putting a lot of crypto-friendly legislation in place. The SEC went through a serious reformation. Paul Atkins is the new SEC chair, and he's considered to have more crypto-friendly and deregulation orientation. There's also the Genius Act. This gives stablecoin issuers a defined regulatory home. It reduces some of the legal uncertainty that has slowed broader institutional adoption. Trump has also banned federal CBDC development, and this anti-CBDC policy pushes users towards private digital assets. And lastly, a lot of crypto-related ETFs are waiting to get approval from the SEC. Nonetheless, the general crypto market hasn't seen that much of a benefit. If you compare where alts are when he started his presidency and where they are now, it's scary. Most alts have lost between 50 and 75% or more. The results are mixed when looking at on-chain data. For example, Bitcoin indicators suggest that Bitcoin is undervalued below $94,000. For miners, mining is not profitable below $88,000, and break-even at $88,000 is structurally bullish for Bitcoin. It signals strong miner competition, reduced selling pressure, increased incentive to accumulate, and a historically bullish setup after minor stress periods. The only bearish angle is short-term minor capitulation, and this typically resolves into upward moves. At the same time, transaction metrics suggest mass capitulation of Bitcoin. For the short term, this is slightly bearish because capitulation equals final selling pressure. However, for the long term, this is strongly bullish as capitulation equals cycle reset. And capitulation is like cleansing the order books. After that, even small buys can push the price up aggressively. It's also a good time to take a closer look at some charts. As for the liquidation data, most of the time, Bitcoin long liquidations is more than that of ETH. However, in the past few days, we've seen long liquidations of Bitcoin Bitcoin and short liquidations on ETH. This means that ETH bears are getting tired, and it's a classic case of the dump being over. As for perps volume, the volume of perpetuals has not gone up since the dip, and it means that bears are not shorting. In other words, bears are not bearish at this point. Then there's the Coinbase Bitcoin Premium Index. There's a continuous negative premium on Coinbase. This means that US investors, including institutions, are selling more than they're buying. This puts downward pressure on the Bitcoin price, so short term, it's bearish. However, let's take a look at the long-term meaning. Once US sellers are exhausted, negative premiums often flip positive. This shift has historically marked local bottoms and strong recovery phases. And then there's a Bitcoin MVRV score, and the MVRV shows how much profit the average Bitcoin holder has. Right now, it's around 1.8, not 1.5, and it's easier for the indicator to drop from 1.8 to 1.5 than a rise from 1.8 to 2.4. So the market could still move downwards before it becomes strongly bullish again. So in the short to mid-term, it's a bearish bias. However, for the long term, it's a healthy or bullish setup. So most indicators are short-term bearish. However, for the long-term view, these same indicators are bullish. In other words, yes, the pain can increase. However, towards the end of the year and during Q1 in 2026, sentiment may turn around. So what do you guys think? Is the bear market here, or is there still a fight left in the bulls? Let me know in the comments down below.